it's a very, very tepid Friday, if I can use that term, but not tepid for Vakrangee, or maybe more tepid for Vakrangee, because it's hit a lower circuit after the company announced a change in the capital allocation strategy last evening. Shareholders will not be rewarded with a buyback or a dividend as earlier planned. Darshan is standing by to explain exactly what has changed from the last time around. Darshan.
Yeah, so basically on 12th of February, they came out with a capital allocation policy. They said that they will consider this, and they said they will consider it. They didn't commit to it. That's what I wanted to say. 1,000 crore buyback for, what they want to use their cash. They had almost 1,475 crores. So what they said is that they will consider 1,000 crore buyback, 250 crores for dividends, and 122 crores to reinvest in the business. Now, what happened post the numbers that came in yesterday? They've changed the capital allocation plan. What they've said is first they look to increase the ATM count, and so what their main plan and strategy was that they want to increase ATM. So each ATM cost over 2 lakh rupees. In their 45,000 kendras, they want to install these ATMs. So that's a cost of almost 900 crores. And they say that first the share buyback or the dividend option will be considered only after the first 5,000 new outlets are operational, when they test this thing. So they're saying that they are putting this on the back burner. They haven't put it in black and white that they want to shelve this plan, but indirectly they're saying that first we will look at raising the business or capex or the ATM, then we will consider this. So that's what happened, and that's what got the investors disappointed. Now, what is the new strategy of Vakrangee? Firstly, they are saying that they will upgrade all the 45,000 outlets that they have with this ATM. Now, long-term target is 75,000 ATMs for till 2020. That would mean that another 30,000 ATMs that will come in. So ATM business capex will be ramped up. Each kendra will have an ATM, and that cost is almost 2 lakh rupees per ATM. That means a capex of 900 crores on the existing 45,000 centers, and by 2020 another 500 crores, given the fact that they'll have another some 30,000 new kendras that will come in out. So they're taking no new mandates for the legacy business, and they want to focus only on the Vakrangee kendra. What has happened in the financial this time around is that they've taken a big one-off that is there, and that has impacted the financial. So fourth quarter, there was a one-time write-off in e-governance business, which they want to exit now completely. It was a 220 crore loss that was factored in as far as other expenses in the P&L, and that is why their EBITDA took a big hit coming around. So if you're looking at even though revenues grow 61% on a YOY basis, the EBITDA was down 64%, factoring in a 220 crore one-time expense here, and that has also been factored in the profit this time around. But more than the financials, I think it's a change of the management, in which first they had indicated that they will consider a buyback and a share dividend. Now they've changed their stance, and they're saying we'll grow the business first and then consider it. So there's no much more clarity coming in what the company management wants to do, and that is why the stock is down in trade today.